Hello, everybody. Now we know stock is part ownership of the company. When we buy a stock, we become owner of everything the company owns, and also uh, we have a claim on the profit of the company. And sometimes they pay us dividend every 3 months, and our stocks are appreciated with time. Okay, sometimes we might lose money, stock might depreciate, but if the company is doing well, we don't worry about that. If the company is not doing well, then we can lose money if the company go bankrupt. So we need to know that. So what are the type of stock there is? So there is two main uh, type of stocks, right? Two main types of stocks. Okay, they can divide stocks into two categories, two type: the common stocks and the preferred stocks. So the common stock is the choice of most investors, investors like you, like me and you. If you are on Robinhood right now, it's big. If you're on Thinkorswim, if you're Webull or any other brokerage firm, we getting the common stocks. As owner, we are entitled to vote on the selection of the board of directors, the people who run the company, who check on the company. We can vote on these people. Dividend is dependent on corporate earnings. So the way we make money is when they pay dividend, and the company need to make money for us to be able to get our dividend in a regular basis. So that's why board of directors and CEO and the staff is important. Sometimes they will tell you you can listen when the company has an earning call, when they have meetings, some of the important meetings to talk to shareholders. They will send you an invite. A preferred stock is the stock given preference over common stock. So if the company go bankrupt, they sell everything the company own. They pay preferred stock first. Then, if we have money left, then they pay the common stock. So, all income to shareholder is based on a fixed dividend. When we are a preferred income, we they tell them what is the dividend they will pay you. Usually, it's a higher than the common stock. Okay, and then there is a time to for redemption. That's mean whoever owned the preferred stock, there's a time limit, like 10 years. After 10 years, you know, they receive their money, they gone. Okay. So they have it's like a payment plan. So that's what the two type of stock you need to aware of. So when you're investing, know what you're investing in. So what are the categories of stock now? There is I put five here, but some people might break them up into more. Okay, the first one is the large cap stocks. Those are stock of large companies with established record of profitability and dividend payment. So expensive and stable. This is what how we can categorize those large cap stock like Amazon.com, Apple. Those are large cap. The price for the stock is expensive, but they are stable and they are profitable. They always pay dividend no matter what happens. So when we're talking about cap rate, capitalization rate is the price of share price times the total number of share in the market. So if you have 100 share at $100, then you have 1,000 stock, cap rate of $1,000. So that 1,000 stock or $1,000. So this is a cap rate. That's how they measure how big the company is. Growth company or the company that the earnings is rising as fast as we can. So, for example, Netflix is one of them. Okay, so they reinvest the profit. So, if you start early enough in those companies, you'll be able to make money with appreciation because this company you tend to be really for a long period of time, and then you can grow your money. The stock price will grow because the company is doing well. You can appreciate in value, and then at sometimes they might start paying dividend. So be aware of that. Income stocks are stocks that pay reliable quarterly dividend. Usually utility company, some of the waste management company. Waste management always pay dividend. Verizon is a good one. It's paid dividend. AT&T, they pay dividend. So I bought about 200 share of AT&T last year, but it's appreciated and then it's been paying me dividend, which is really good. So I love that. Okay, small cap companies. So those are the small companies. They fluctuate significantly sometimes, right? They fluctuate in the market. You say they go up and down. Sometimes you can't control it, but in the long run, they usually perform well. So you can do technical analysis on the charts, but also do some fundamental analysis to see how the company is doing. So if the company is doing well and the products are good, so even though they are frustrating in the market right now, it might be for a 3, 4, 5 years investment, 10 years investment, it might be one of the great one that you do. So a lot of companies, investor title company, that's one. Alexander's Inc. This one is a finance company that's finance real estate. So those are price were low, now they are up to 100 and some dollars per share. So speculative share. Okay, Numinous Wellness Inc. That's one of the example, and a lot of the smaller one like $2, $1, 50 cent stock. These are stocks and company that have no proven track record, no dividend history. You just can sometimes you might say, you know what, this company, even though it's not stable, there's no proven track record, there's no history, it's a new company, but the product is good. Okay, so that if you know that the product is selling, you might invest some money. Expect for the next 5 to 10 years that thing might change around, or you might lose your money. So pay attention to that. The six categories we're talking about is foreign stocks like Neo Inc., which is electric car company in China. Okay, so Hello Pal International, well, that's another example. Stock affected by all market condition plus currency exchange. Every time you go to a different country, the company they have to exchange the money to do business, right? From local currency to U.S. dollar. So usually those are anytime the political situation change, you know you're not gonna be stable. So it's the same way when we say Neo Inc., a good company, but because China is so unpredictable that the stock is going up and down in the last 3, 4 months so much that I was watching it. So they have different law, different regulation. So we need to be aware of those six categories of stocks as we start to invest. Remember, there's large cap, growth, income, small cap, speculative, and foreign stocks. When you see a company, the chart might be good, okay, the fundamentals might be good, but you have to look at also where is this company, where is it located, okay, who's running this thing. So once you do your homework, a foreign you might buy a foreign stock, but you know what you put yourself into. So again, we are happy again. That's another class, another session, another lecture done. So next time we will look at ways to make money.